Okay, so the stock market has had a crazy couple of months. I took some time off from this channel, and so today we're going to talk about my favorite stocks, the Canadian banks. And of course, the Canadian banks have gone way down recently, and everyone's kind of thinking, well, is this kind of overblown? I'm kind of thinking that myself. There's been one stock that I have been personally getting into as well, and that is BMO. And we're going to be talking about all the banks, but I'm going to talk to you about why I personally am buying a ton of BMO at this point in time. Let's get down. Let's check this out. There's also going to be one more change, and that is I got a new app that does thinner lines. The main reason being is because, of course, the other app just stopped working. They don't support that app anymore. So first off, BMO. What makes BMO so great? Well, the main thing that I really like is that right there. The PE ratio is 6. I was actually getting in on BMO recently when it was below 7. Or I mean, it's at 7 now. I was getting in when it was at just over 6. And of course, anytime a Canadian bank gets that low, you really need to take a serious look at it. The average volume right now is 2.1 million shares. It was down the last day of trading, which was Friday. And of course, I have heard some channels, some websites saying that this was capitulation. This, in my opinion, is not. The reason being is this one-day chart being not like this, where you would normally see capitulation right there and high volume. Blue on red makes your eyes hurt. They've also been raising their dividend as well recently, and many other Canadian banks have too. So this was the massive downfall that we seen. And this was actually quite interesting. The reason being is, of course, this right here. We can see on some instances that this is a pretty strong trend line. Of course, it broke above a few times, as we can see in some of these situations here. And then it broke above pretty strong here. When it did fall back down, it touched that trend line once again. And now it's come to essentially pretty well a double bottom and starting to recover. This could show that it could be the actual bottom, and we may see some growth into the future as well, at least in this stock, and many of the other Canadian banks are trading very similarly. I was most recently buying this stock at 122, not on this side of the dip, but on this side it did go down a bit further from where I bought it from. I did not time the bottom. Nobody ever does. They will lie if they say they do, but so far my guess is pretty strong and pretty close to correct. I also like to look at, of course, the 2-year chart right now, because we get to see pretty well the bottom or close to the bottom of that COVID pull down or drawback or whatever you want to call it. But so many people were saying, oh, this is going to be a death drop way back to COVID times, and no, it's not going to happen because they're making more money now than they did back then. They're still making money. So could we see a little bit more of a drawback? Potentially, we may, but I really highly doubt it. This is what I'm really excited about right here. The fact that as soon as they were allowed to raise their dividend, they raised it, and then literally 6 months later, they raise it once again. This is something that you want to see. Of course, this is predicated on the previous quarter. However, we have to remember that technically we've been in a recession since July 1st, and on top of it all, technically, we've had ourselves going into a recession since the beginning of the year. Would a bank really be raising their dividend during a recession? Probably not. So yes, this is a recession. I don't think it's going to last very long. Next is TD. This is currently a pretty expensive stock versus, of course, BMO. It's 10.33, but most of the Canadian banks right now are around that 10 mark. BMO is the cheapest right now out of the big 6. Between dividend percentage and, of course, PE ratio, that's what I look at when I invest in the big 6. BMO also had an up day TD had an up day versus BMO that did not have an up day, and TD did not have higher volume, while BMO did. We've also seen a massive drop as well, and it went below that bottom here, which did scare a few people. That's potentially why it had that V bottom there, and it popped back up. They did not raise their dividend last quarter. However, many other Canadian banks did. If we compare their earnings to BMO, for an example, or pretty much any Canadian bank, every Canadian bank had a fantastic previous year, and of course, their earnings mostly all beat the last couple of quarters, some of which being pretty crazy. Bank of Nova Scotia is kind of the bank that pretty much most Canadians kind of hate for some reason, but what we do see is that their dividend is higher than most, if not all, of the other Canadian banks at 5.28%. That seems to be the highest right now, but they did also have higher volume on an up day. That could show some momentum as well. Their PE ratio is one of the lower ones at 9.44, so it's technically kind of cheap right now. Again, all the Canadian banks are going to look pretty well the same when it comes to this drawdown. Pretty much, if you ever see a whole sector, for example, the Canadian banks trading the exact same way, maybe one having a small down day versus one having kind of a big up day, but generally speaking over a period of time, having the exact same kind of movement over that period of time, what that's going to generally show you is it's the big guys selling or the big guys buying. And of course, that's when you really need to do a lot of research as to why they're doing that. Be fearful when others are greedy. Be greedy when others are fearful. They've also raised their dividend about 3%, which is fantastic, really, in my opinion. They raised it pretty good before once they were allowed to raise that dividend. However, that to me is very interesting again because July 1st was, of course, technically the first day of a recession. They also had a really good previous year and 3 blown out last 3 quarters. Next is Royal Bank. They also had an up day, and this is starting to make me really want to talk about my theory on the Canadian banks by the ones that people don't like right now. Because what will happen is out of the big 6, generally, there's going to be 3 or 4 that are favored and 2 to 3 that are not going to be favored. When you, again, going back to the whole Warren Buffett thing, be fearful when others are greedy and be greedy when others are fearful. And with the Canadian banks, they generally all do the same kind of business, and they're all pretty well backed up by the Canadian government. So what that basically means is they are essentially too big to fail. We've heard that before. I know that's a bad saying, but they tend to be pretty well protected. They've learned how to make money when, of course, interest rates are down. When interest rates go back up, banks make more money. So they're kind of a monopoly in Canada. And even the small banks like Tangerine are owned by the big guys too. Now, Royal Bank is at 4% dividend. It also had a higher volume day as well. And its PE ratio is higher at 10.9. They also have that downwards trajectory. And of course, it did recently break past that kind of top level of the resistance as well. Now, if we look at their dividend, they just recently raised their dividend too, which is fantastic. This gets me really excited. Anytime that you see this kind of an acceleration in revenue and also earnings is extremely important. One thing that I would really take a look at and research is why they missed while everyone else beat in that 4th quarter, but they've had 2 massive beats recently. CIBC is another great pick. They have a lower PE ratio of 9.1. This would be a fantastic option if you were looking for a higher dividend with a lower PE. And of course, they did have a lower volume as well, but they were up 1%. Unlike BMO. They again have had some pretty crazy bit of a downward spiral. It did, however, kind of break through that resistance right there, so that's going to be kind of interesting. They've also raised their dividend a lot recently, and of course, June 27th, they raised it once again, so that's really interesting. They've had 2 missed quarters, which is something that you may want to research and figure out why that happened, because of course that's not a massive beat, a massive loss, that's a massive beat, and that's a massive miss once again. So anytime that you see that, that's kind of something that you should really look at, even though they had a really good 2021. Now, out of them all, personally, I would be looking at Bank of Montreal number 1. In my opinion, that's the one I've been buying. However, National Bank of Canada, which is another one that I just absolutely like I've been buying a lot of National Bank. They're at a lower dividend at 4.1%, but their PE is 9.2, and of course I'm going to explain why this is another great pick in a second. Its downward spiral has been pretty massive, but it's had some pretty nice spikes as well that you could have played if, of course, you were a day trader. I don't day trade banks, but some people do. They raised their dividends substantially as well in June, but the one thing that I really like is this. 2 ridiculously massive beats. They did miss in the 4th quarter, Some other banks did as well, but this is absolutely crazy. Anytime that you see massive revenue growth and just ridiculous earnings growth as well, that tells you that they are very financially secure and strong. So I think that this would be a fantastic second pick. Right now, I would be looking at Bank of Montreal number 1, number 2, National Bank of Canada, as well as CIBC. Those are the 3 that I would be personally looking at, Bank of Nova Scotia being the 4th. That's my own personal choices. These are my reasons behind it. I hope that you've enjoyed today's video. If you have, hit that like button, subscribe. I'll see you guys again next time.